My trade of the week is the dollar yen. We have seen the dollar push a lot higher against the yen. We're heading towards July 2007 highs at this moment in time. We both must bear in mind that there are a great deal of options expiries above this particular level, and this could see this particular currency pair retrace some of its steps to the back end around the 123 level over the coming hours. So this is the opportunity we'll be looking for ahead of the GDP release from the US this Friday. So let's look at the chart and we'll see exactly what I mean. Ultimately, what we have at the moment is this pennant pattern, and we have broken out of this particular wedge to the upside. But this is an hourly chart we're looking at here, so there is a potential for us to pull back to the meeting of these two trend lines, which would then provide potentially a better entry point. What is interesting, though, is the trend is behind the US dollar, and it is quite difficult to step in front of such a big train. But certainly, looking at the GDP numbers for the US, we have seen the first quarter, which came in at 0.2% of growth, and that's more than likely going to be revised downwards. Remember, we need 2 quarters in succession which are in decline for there to be a recession announced, and of course the US may very well be on course for that for the time being. Whereas if you look at Japan, we have seen a 2.4% annualized GDP growth in the first quarter of this year. So it does seem that despite the diverging monetary policies of the 2 central banks, that we could see some consolidation based on the momentum we've seen over the last couple of days. So I'm watching for a pullback before getting involved and jumping on this US dollar train, but do watch for those GDP figures on Friday, because we could be set for some disappointing news.